Right, let's do a quick video here on something I really put a lot of thought into this week. I've been doing a few surveys of late, and the surveys have been brilliant. I love doing surveys. I love seeing what you are thinking and what you are struggling with and what you are finding useful. And I'm going to be doing much more of these. Now, I'm starting to realize the importance and the power of surveys, so be prepared for more of them. But one question that always comes up is, what is most important? A system, a trading system, the trader's mindset, or money management? All right, think about that. Which of those three are the most important? A trading system, trader's mindset, or money management? You'll probably choose one, and being on the trader's mindset, I'm hoping you chose the trader's mindset. All right, but if you did, it's not necessarily right. The truth is, neither of those are more important than the other. They are interdependent of each other. They are as critical as each other. It's like a three-legged stool. You know one of those milking stools? You get, I think, three-legged coffee tables as well. That's what it's like. If you take one of those legs away and you're left with two, you've got nothing. You've got a piece of wood that can't even stand up and do anything for you. It's going to just flop over. Right. The same with trading. Those are the three pillars in my mind of what makes trading work. And the problem is, most people have one leg missing. Most people either have their system honed and they've got this, they love this thing and they've really worked it out. But they're still failing and they can't figure it out. They know the system works, but they're failing because emotionally they're a bit of a wreck and they're anxious and they're making poor decisions and they're not trading the system as well as they think they are. And we know how to analyze that. And that's what this video is about. We're getting back to the trade planner, and we're going to spend 2-3 videos on the trade planner, because that's what I want to round this course off with, is practical, useful application of what we've learned. Alright, so they're interdependent, they're important, and just understand that they're all critical. You cannot do anything without the other. If you don't have your money management right, if you're risking too much every time you trade, your emotions cannot help be affected at some point. When you lose 2-3 trades in a row and you've got 10 or 15% down on each trade, you are going to be a wreck, no matter how much you had prepared for being in control of your trader's mindset. If your money management's out, it's going to keep interfering with that other leg. And the same with the system. If the system isn't well analyzed and the system isn't a decent system, then it doesn't help having brilliant money management if you've got a crappy system that keeps losing your trades. Alright, so it's all common sense. You can figure it out for yourselves. Alright, so understand that. And then what I want you to understand next is it must become second nature. It must become at a subconscious level. You must know those three legs, exactly how they interplay and how important they are. Like a ninja, you know, a karate expert who's who's trained, you know, for 15-20 years, and has his daily routine and discipline of going through his katas, going through his moves. He's now at a point where if someone throws a punch at him, he will instinctively, without thinking, be able to block it and defend himself. That's where you need to be with trading. If the market throws you a curveball, you must be able to react without even thinking, because you know exactly what's important. Alright, so that's it. Alright, then you've got to have a form of measure and monitor to make sure that you don't slip, of course, and stay disciplined and to stay practicing like the ninja warrior. Right, and then I just want to quickly discuss, most traders fail for a number of reasons. And they all interact, they all interplay, but they're all similar to some extent. And I could probably have blazoned it across the top, put your ill discipline. That's what I really could have done. I hadn't thought about that. Rushed entries or being ill prepared. Right. We all sit around looking at the charts, analysing our stuff and doing what we're doing. And we're looking at our currencies and we're bored and we flip across and whoops, and there's the JPY, the USD JPY, and you're looking at, oh man, have a look. Oh, hang on, look at that. And the candles start piling upwards. And what do? Oh, let's just throw a quick one on that. It's obvious. It's just going to, oh, I get 10 pips out of that. Right, trading like that, just not preparing, rushing entries, maybe coming to the screen late, and you haven't had time to go through your whole analysis, your whole trade planner, and you, oh man, it's already happening, the setup's there. And you jump in, and you haven't looked at the longer term time frame, and you haven't seen that there's problems, lying around the corner for you. Okay, poor risk management. Money management, poor risk management, it leads to pressurized trading. All right, however you got there, whether you got in by mistake and you pushed the wrong button and you now overcommitted, or whether you did it because of ignorance and you don't understand how it works, whatever it might be. But if you're in the market with too much money at risk, you're under pressure. All right, you're not going to be focusing on the upside so much anymore. You're now going to be worried about trying to protect. You suddenly realize, hang on, I'm exposed for all of this. Man, what do I do? And the worst thing is with that is that often there's a bit of a drawdown. And it gets close to your stop. People panic because they can't afford to lose 20%. They can't afford to. Your wife will kill them. Their spouse will kill them. What do? They move the stop away because they can't afford to lose 20%. They'll risk 30, 40 by keeping on lowering that stop because they don't believe it's going to blow out at all. They believe that at some point it's going to turn, go back in their direction, and they promise themselves that they'll take their 5 pips. They'll get out. Just give me a little bit of green and I'm out of here. All right, but now suddenly they're 40% exposed. All right, that's ill discipline. Okay, that's just rushed entries, poor prepared, and being under pressure because your money management policy was out the window. Right, not trading with all the facts. That, I nearly mentioned this now, but that to me is when you just don't have an idea of the bigger picture. Maybe you're trying to scalp a 5-minute chart and you've got your little system going and it's sort of working for you, but what you haven't looked at is the bigger picture. You haven't looked at the hour chart and you haven't looked at the day chart and you've got no context of where everything is at. You haven't got an idea of where these zones are, where the support and resistance levels are. And so you get into your trade all excited and 10 pips later this thing starts piling the other way. And now you're all upset because the trade should have been on. But if you had done the work and made the effort and had all the facts in front of you, you wouldn't have taken that trade. You would have realized even though your trade setup criteria were there and the entry was on, there was something else that said stay out and you would have rather not have taken that trade. I often have G7 setups, for those of you that know that system. Very often I have them, but I don't take them because I'm not comfortable with the other parameters. The criteria according to the system are all there. There's no reason why I don't have to take that trade. It's all there. It says there's a G7 trade. But I have analyzed further and I have seen that there's something else that I don't like on a larger time frame that is saying that even though that's there, the likelihood is that the market's probably going to turn and react just a little into my trade. And I don't want to do that. I don't want to have to make decisions like that. So rather just stay out. Casual trading, that I mean by when you're bored. When you have 8 hours a day to trade and, well, you're going to trade. And so you're sitting in front of the computer and you're looking for anything to do. And you start changing from what you normally trade, an hour chart to a 5-minute chart, and to a currency pair you never even trade, and you're looking for something to do. Okay, that's obviously, and preoccupied in that you're trying to run your business from home and you're trying to do other work, and you've got these charts in the background, and you're on a phone call and you think you see a setup. You just haven't got the time to pull your trade planner out and complete it because you're busy. All right, that's also an area of great concern. All right, so that's what I want to say. That's all I want to say. I've got my notes here that I've been scribbling down. Well, I've been lying bedridden for the last month nearly. Oh, how frustrating has that been? All right, so how do we prevent all of this? Well, you know the answer.